Welcome back. You're watching The Money Show on ET. Now, like we told you earlier, now we're going to be touching upon the topic of spending. But this time around, we don't want you to spend your money because I'm pretty sure many of you may have just overindulged a tad bit during Diwali. And that in turn is not going to spell good news for your wallet and for that matter, even your credit score. So how can you get your financial situation back in ship shape? What can you do to once again bring your credit score back to where it was earlier? To talk about all of that and more, I have with me Anshuman Mishra, the founder of LoanAdda.com. So Anshuman, I know that you are a very pragmatic spender because we literally went shopping together with our different credit cards. But a lot of our viewers out there may have just indulged a tad bit more, getting in the entire festive and Diwali theme. So many of them may have just maxed out their credit card limits as well. So firstly, since you are, of course, in the business of loans and digital platforms of loans, have you really come across this situation where, around Diwali or especially after Diwali, you do see this situation where your clients may be in that bit of a precarious situation?
See, Mubina, what happens in that during Diwali, obviously it is natural that people have postponed their spending for the full year and they are just going, splurge. So people are painting the houses, they're going out buying things like we bought so many things like an, iPhone or, garments and eat out. So what happens in that is a large part of a credit card starts getting used. Fair enough, because you have used your card, and as you know, in the last show of ours, we showed the savings per card, what we use the Millennia card. Now, what happens in that is, first thing you must do, before the 40 days or 50 days, billing cycle comes, change it into a personal loan, because if you pay the interest through that card, that's to the tune of 41%. Whereas if you change it into a personal loan, that will be something around 11% odd. 11-12%. So it is always advisable to use the card during the Diwali season to splurge or whatever you want to do in terms of buying stuff. But it is always prudent and pragmatic to change it into a personal loan because, see, money saved is money earned. So if you are using a card at 41 and you have not made that effort, suppose you are busy and you have gained some weight having Diwali sweets, you can't give those excuses. Please apply for an unsecured loan and get that. So because that's the first thing you must do, change that expense from card to an unsecured loan.
This is, of course, only in the cases if an individual does not have the funds required to pay off that credit card amount. So, Anshuman, tell me, if, let's say, there is a delay in my credit card payment or I'm unable to pay my credit card, firstly, what sort of an interest do they apply? I think you mentioned an amount, but just, for the sake of our investors, for our viewers, 41%. Because it was quite a high amount. Yeah, 41%. Okay, so that's a scarily high amount. And secondly, yes, how does it impact my ability to be able to take loans or apply for perhaps another credit card in the future?
See, the first thing that any lender sees in you is that everybody wants to know that you have taken money. How do you behave once money is in your hand? Because if you talk about, friends in college, you know which friend in college to give money and where some relative will take it and not come back. So what happens in this matter is that the bank wants to see that if you have taken a credit card, if you are just paying the minimum amount due, because the bank who has given you the card wants you to pay the minimum amount due, because that will be something like, like a 5% of the total outstanding, because the rest of the 95% you are going to pay 41%. So that's not the right thing, because that will affect your credit score. So if you are very credit hungry and you don't have money to pay off, your score will start going down, or at least your obligation in terms of getting a personal loan or unsecured loan or even a home loan will go down, because the total obligation in your unsecured credit card is going to be taken for calculating what kind of loan eligibility you can get later. So the first is that do not have more than 10-20% of your card limit used. Beyond that is not considered good, number one. Number two, to talk of the credit score, because the first thing is that if your credit score is not good, you will not get a loan. So that's not a good thing, because loans, even if you have the cash now, you may need it at a later time. So unless you plan, because these credit scores or credit rating agencies don't change your scores in a jiffy, it takes some time. So if you start paying your EMIs, if your EMIs bounces, that's a problem. If again you're looking for too many loans, let's say as Adda, LoanAdda, the basic concept is that we will give some free advice to the customers because customers don't have to pay anything to us. So we advise them that if you are giving your name and your PAN and your Aadhaar to some intermediary aggregator, they tend to take it to a lot of different banks. If you put it in one bank, there's a problem because that bank may not give you loan. But if you take an aggregator and it takes it to 5 different banks, the probability of you getting the loan from any of the banks is lower because every time somebody checks your credit report score, let's say CIBIL, Experian, Equifax, Highmark, anything, your score starts going down. And typically around what we see when we have our own credit scores which we give free on our platform, 50% of the people have a score of above 700. So generally 750 is considered a good score. So do not, one, let your EMIs bounce. Second, do not have more than 20% of your credit card limit. Suppose you have a 2 lakh credit card limit, you should not have a more than 40,000 outstanding. If you have more, suppose you bought, like we bought an iPhone and you bought it for say 1 lakh 9,000, 60, 70,000, if you don't have the money to pay, take a loan and clear it. Because the problem which happens, that is, if you don't do that, in future your loans tend to not come, and if you don't also pay off your card limits, you don't get a card to card. So next time you need a good card, because as we discussed, even different cards have a different limit or some schemes. So please ensure that Diwali, okay, you have had a lot of food, now let's go and exercise. The same way your credit planning should be, Diwali you have splurged, so take some time out, sit down and see your finances. If you have money to repay, as you rightly said, Mubina, pay it off. If you don't have, then take a personal loan and pay it off, but ensure that more than 20% of your credit card outstanding is not standing loose.
One more very important point which we must take cognizance of is that forget about you not getting a loan. If your credit score is low because you have defaulted on your credit card payment or paid it late, the other problem is that it will also hurt the interest that you will have to pay. So Anshuman, how exactly does a low credit score or a poor credit score also impact the interest? So for example, let's say if a home loan is available usually to a good credit score customer at X percentage, what will the bank add on to that because you have a not so good credit history?
See, what happens that is, if you don't have a good credit history, then the bank will be wary of giving you a loan in the first place. You may not even just get the loan. So if you have defaulted or you have not seen your EMIs, because at a point of time what used to happen is that the banks used to not take the EMIs on time. It was not very important. But since the credit rating agencies are now seeing and there's reporting, and mostly anybody, NBFCs or whoever is there in the, not new to the credit, if you have any credit record and it is showing some sort of over leverage customer, it's not a good thing, one. Now let's say the bank then decides to give you a home loan also. It will also charge you a premium. So take for the bank, so you will have to pay a slightly higher rate of interest, which could be suppose you are getting a home loan at say 8.5 or 8.8, the bank may then charge you a 9.3 or 9.8 as a home loan, because they see that you are not that good a customer, and they start bracketing the customers as good customer, bad customer. Then they will take, suppose on an average people are taking 60% of the salary to get a higher loan amount. So suppose two people have 1 lakh salary, both of them may get a different amount of loan and different interest rate if their credit record is bad. Now that's something you can always avoid, because if you take if you get, let's say, 60 lakhs on a 1 lakh salary, and somebody else gets 45 lakhs on a 1 lakh salary, the 45 lakh guy has to arrange 15 lakhs from somewhere else, which will be unsecured, which will like a higher rate of interest. So please ensure that just this Diwali time you have done something. So but by, let's say, Christmas you want to buy something like a house or a car or something, it will affect your score, and your score will affect your rate of interest. You will end of the day have to start paying more. So please be careful that you ensure this cleanup happens as soon as possible, within this month preferably.
I think the top tips for a financial cleanup after you have splurged tremendously in the Diwali week are all summarized right there by Anshuman. If you have cash, pay off your card. If you don't have cash, take a personal loan and pay off your card. But do pay it off. It'll hurt your credit history, and not just that, you'll have to pay 41% interest. Personal loan is barely 10-12%. So that's a strategy Anshuman has recommended even prior to Diwali, when we brought him on board on the smart ways to use your credit card and get the best out of it. Thanks a lot, Anshuman, for that.